FOMC day came and went with a yeehaw, a whipsaw, and a yippee-ki-yay, and despite all of that, my students and I have still collected a full bag of Benjamins. So let's look at the details. Big question that I do remain with as I come into today's session is, are we going to see some follow through, or are we just going to start grinding sideways for several days, which is what we've seen, one big daily move, grinding sideways for 3, 4, 5 days, then one big daily move. So are we seeing the moves start to expand? Are we going to get some trending moves, or is it just going to be more of the same? So 3 things we're also going to look at: why I stayed bearish going into FOMC on the swings while I was busily grumbling about the markets. Crude's looking like we've got a push back to $89, and I've got a brand new crypto pair for us to dive deep on. So let's look at the charts. Now we have daily breakouts on these small ledges and the larger consolidations on the futures, and obviously on the cash markets as well. On the stock indexes, VIX is remaining elevated, and as I'm recording this, we are seeing the VIX just taper off. We're seeing the markets rally just a little bit further on stock indexes. So are we going to see a narrow ranging day, or is it going to be some follow through day? Again, we'll see when we see. We'll see what we see when we see it. But the system generally takes care of things for us. We don't have to stress too much. What I am getting excited about is if we are going to see In fact, let me go to the live chart of VIX for a change rather than look and talk about it. One of the things that we've seen quite regularly, if I just zoom out, the beginning of the year, beginning of last year, and what we're seeing right now is this elevated VIX, and we don't often get a chance to chart the VIX, but sometimes we do, and it gives us these clues. So if we look back at the beginning of 2025, we can see that the elevation was just catching this trend line, and then we get that pop in volatility, which obviously is the sell-off in the S&P, and we can see the same thing at the beginning of the year. We didn't have a massive move at the beginning of the year on the markets, but again, the VIX did start to elevate to take that into consideration. We can see it in sort of small ways and very quick here, just prior to the eventual VIX pop and the market drop. We can see just those rising lows, which again is what we're looking at right now when we think about the volatility index. So again, it is quite interesting to say the least when we kind of just look at the footprint and the clues that we have available to us. So are we going to see the 10% in 10 days was the big point, or is it going to be 5% in 10 days, which is what we've kind of seen in the last 2 years. Again, we have seen a 10% sell-off over a 45-day period, a lazy decline, but just not the big move in a short space of time, which is that sharp corrective move that we've not seen. Again, we normally see it once or twice a year, usually February, March, usually September, October. And again, prior to that, there's clues that we're looking at, namely on the VIX, before the pop on the VIX and drop on the VIX. Talking of pops and drops, for clarity on the usual swing chart, we're on the 30-minute cash version, the same S&P charts. For clarity, I've turned off my swing tool so that you can see the range that we've been talking about for all this week. Essentially, price has pretty much been bopping back and forth between the defined upper and lower boundaries that we noted at the end of last week, beginning of this week. It's being the same as around about the 17th of April. That footprint, again, the market leaves clues if we look, but what we see is the market dropped right out the gate, breaking out, and then just prior to the actual announcement, we just moved back into the range. On the announcement, we go up to the range high, and then on the statements shortly afterwards, we see the market drop and then break out again. So we've just gone through the swing low. Technically, we've got the breakout pullback setup. So we've got a nice breakout target, height of the range as a target, or a multiple of the height of the range, in this case 2 times the range height. That just gives me that target. They're pretty standard stuff there. Uncle Russell is doing the same thing, and obviously we're making some money along the way, which is all right. What I did neglect to mention, which is one thing that we did talk about through the live calls on the live calls, the morning briefings on Tuesday morning and Wednesday morning, was pretty much remaining bearish. We're in a consolidation. There's nothing to do. If we continue to go sideways, I'm going to make some money. So it was just more of a lazy position management choice. Again, I was more inclined to the bear side as we discussed. So ultimately, we got the direction pre-news and post-news. Uncle Russell was a carbon copy, staying bearish going into the bearish breakout, snaps back to the range high, and then pops and drops yet again. Carbon copy of what we just spoke about on SPX. So still bearish, still looking for a move lower. We've now got a breakout target in place. So again, while I've got the income trades on and open, when we get a direction move, we do get paid a little bit faster. I've got a little bit of a directional twist to the income trades, which we speak about in our live calls. I don't know if it's got an official name, but I've called it a directional butterfly, essentially, or a directional broker wing butterfly, perhaps more accurate. So we're getting a little bit of directional love, a little bit of income love, so we get paid doubly if we get the direction, because we're usually pretty good on direction. And if we don't, we still get paid for that grind sideways. Crude oil is pushing ever higher. Again, we've got the V-shaped entry. The turn location has been nailed. Price making high highs, high lows. We are just seeing on the live chart market just sell off ever so slightly. So we'll see if we can, there's a dip buying opportunity, and the push up to 89.90 level looks set as far as I'm concerned. Now, typically and normally I'd be looking at Bitcoin and still complaining that it's going nowhere fast, which it is. Now, it is developing ranges within ranges within range, patterns within patterns, and it's an absolute backside to try and find anything that lasts more than a day or two's direction. Very similar to the stock indexes, it's that behavior. So I went looking elsewhere, and again, I'm not going to say that I'm clever or creative or anything like that. I am relatively new to the crypto world. And all that means is I don't know the names of everything, the process and the pairs that everyone looks at. And I honestly can't be arsed digging through the shit coins, dog coins, meme coins, bullshit coins. I can't be bothered digging through the swamp. But a good friend of mine did mention, take a look at Ethereum versus Bitcoin, or Bitcoin versus Ethereum, whichever takes your fancy. I'm looking at Ethereum versus Bitcoin, which is available on my brokerage platform for the data. I can get it on my charting platform as well. So this apparently is the inverse. The regular is Bitcoin versus Ethereum. I'm looking at Ethereum versus Bitcoin. Inverted. But the point is we've got some very nice trending behavior, got a lovely channel to trade. We can pretty much go from range high to the range low, to the range low to the range high, and basically ping it back and forth like we normally do within the trending behavior. So maybe we get a little bit of love, a little bit of movement on that. Now, one thing I have been looking at recently is points and figure charts. I used to look at point and figure 20 plus years ago, but for those of you who know me, I was actually a TradeStation user for a little over 20 years. But when I moved to TradeStation, they didn't do point and figure charts well at all. And if you ever looked at them, it's actually difficult to find a platform that does it at least passably half decent. It was always a specialist software back in the late 90s and early noughts. So what I'm looking at is again TradingView's version of point and figure. They do it reasonably well. They do it well enough for me to be okay with it. But what we have is this lovely little point and figure range, and we can assess this here. This is where we're at right now on ETH versus Bitcoin. And are we looking at the breakout or the range reversal? If it's the range reversal, again, until something new happens, I've got to assume and presume that it's going to be the same thing continue. So a move lower is expected, but we'll evaluate on the breakout should, when, or if that happens. So over under, let's just call it 0.03. Add your own 0.0 or whatever else. The 3 level. Over under that level, and we'll be assessing for the breakout or below for the range reversal. Right now, we just go back on the slide. The smaller range on the 4-hour chart. Trading from the range high, looking for the range low. If we get the breakout of that, that could be the tipping point for that point and figure range to be on the table. And whichever way it goes, we're going to make some money. It's just a case of assessing that initial stop-start. Will it, won't it go in whatever direction? Let's take a look at the wall of wins once again. FOMC day. Lots of people leave it alone. All the data, all the research that I've done says that FOMC days, the Fed announcements, etc., they are an odds-enhancing day. We shouldn't shy away from it. And the brave students that take my advice and research are posting the wins, which is absolutely awesome. See, 8 wins posters, 5 traders on the board, 40 to 50% return on capital, 2 paying instruments, SPX and Russell. The community is bagging those wins. There's the proof they're all posting the wins. Mary, Chris, Don, Eddie, Bill, well done. If you've not posted, also well done. Not everyone likes to post publicly, but absolutely well done for getting on the scoreboard. It's the same trades, but 3 different desks. It's not me that's saying that this is a good system. It's repeatable, it's replicatable, it's profitable on a consistent basis. So let's look at the trade. Very simply, we were looking at the standard stuff. The software highlighted a great setup. It was actually a double bubble day. The score, we had a great ATR ratio. We had a great day of the week. We had a nice early breakout. The close was aligned. So the premium profit trade grading, which it usually does in the background. I've got it shown so you can see it here. But we've got this great opening range setup, standard breakout. Initially a great move, managed to lock that profit in. So it doesn't matter that the market turned around, then the news happens, then the press conference happens. It doesn't matter about what happened when it happened. We've got the profit locked in, and this is what we're ultimately looking at. Get the trade on credit spread instead of closing the trade. Lock it in, and again in this case, the market carried on dropping. But if it had just carried on flirting around that, so just go back to the chart, what could have happened, again pre-news, we were literally right at the 73.90, which is where the short strike was. We were kind of dicking around here on the announcements. It kind of spiked up, it retraced, then when we get the press release, then something negative was saying on the press, it was flirting around. We could have landed the bullseye in the profit tent, is all I'm saying. It's possible, but if we close the trade and take the profit, don't have the bonus trade choice. I've got the money that I wanted, $145 locked in on the challenge account, with the potential for what have we got? $645 if we get somewhere inside that profit, and we'll get some portion of that up to $645 on this particular. So, good trade. Everyone's got some wins on the board, which is always nice to see. Here's a fun fact. Point and figure chart is the oldest charting method in the Western world. First written in 1898. As a reference, it turns up in a book called The Game in Wall Street. Charles Dow was plotting his own version back in the 1880s, 1890s and called it the book method. Bar charts don't really get a mention until 1896. Candlestick charts, despite being centuries old in Japan, we really only saw them in the 1980s when they were brought up for the Western world. And the chart that I'm pointing at on crypto in earlier, it's basically older than any chart type in the Western side of the world that most people think of. Again, we've got used to the bar charts, the candlestick charts is kind of the default for most people, but the point and figure chart is the oldest chart in the Western world. So remember, I am not smarter than the data. I trust this process. I've spent a lot of time researching the data so that it works. We've got a lot of positive expectancy baked into the way that we do things. So again, FOMC days, should we ignore them? Should we step aside? Well, the data says to trade them, and it's usually an odds enhancer. When I did this research, that was actually a huge surprise for me. So again, I am not smarter than the data, baked into the process, increased the position size on a day like today, and everything turned out fine and dandy. So less brain equals more gain is the point. Again, we're not smarter than the system. And if you want to learn how to collect morning income or weekly income, head over to antivestor.com. The links are in the description, and you'll be able to read about the systems, the processes, and the software that you've seen in the system. So that's all for today. Thanks for your time and attention. I'll see you at the same time next time, which will probably be tomorrow, on the next installment. Until then, bye for now.